written statement, you acknowledged, as you have in the past, that there are some tokens that are not securities. And I know your view that whether or not a digital asset is a security is a facts and circumstances analysis. I know your view that the SEC has very broad authority. But you've also made it clear in the past that Bitcoin is not a security. Now, some SEC staff have also previously said that Ethereum is not a security. The SEC's DAO report characterizes Ethereum as decentralized. So here's my question briefly, and without getting deep into the weeds on this, and I acknowledge your belief that most tokens have a large degree of central control, but generally speaking, is it fair to say that a significant factor for you in whether or not a digital asset is a security is whether it is centrally controlled or decentralized?
Well, I look to the Supreme Court that's often written about this, probably close to a dozen times in 50 years, and it's whether the investing public is anticipating profits, and that includes anticipating profits from appreciation as well as from, as you mentioned, rights, based upon a common enterprise, but
Right.
the efforts of that common enterprise.
Right. So I guess another way to put my question, which you haven't answered, is it possible to have a common enterprise if it's something is decentralized? How could I have a common enterprise? I mean, it doesn't isn't centralization necessary to constitute a common enterprise?
Um, it, you could have some things that are quite open, but still have, if the public is anticipating a profit based upon that common enterprise. So I'm being careful with my words here to be accurate as best I can. The common enterprise, are you relying on a group of individuals? And look, these are not laundromat tokens. There is
No,
a
I
group
understand,
of
but
people
you're
that are
not, you're not
actually.
answering my question though. But so let me try it this way. What is it about Bitcoin that causes you to conclude it is not a security?
Well, one is there's no group of individuals in the middle.
Right. It's
There's
decentralized.
no group of individuals in the middle
Right.
that are basically, and you're not. In essence,
So
the investing public's not betting on somebody in the middle or six people in
so
the middle.
you're choosing not to use the term decentralized, but that's what you're describing. It is the decentralized nature of Bitcoin, I think, is really what you're getting at. Here's my point, and I'm going to run out of time here, but there are a lot of projects, as you know, decentralization and centralization occurs on a continuum, really, I think. And you've acknowledged that there are tokens, plural, that are not securities. I think it's because of this centralization that you come to this conclusion. And my point is, it is not reasonable to fail to provide clarity, to provide the definition of exactly where on this continuum you have a sufficient common enterprise that it qualifies as a security and where you don't. You've said Bitcoin doesn't. Some of your colleagues have said Ethereum doesn't. But a reasonable developer who wants to comply with this doesn't know where that line is drawn.
So I think where we might have a difference is there are many factors, and so it's not one spectrum of centralization versus decentralization. What the Supreme Court, and I try to stick to, they're the Supreme Court, and there'll be debates about other laws. I try to stick to what they say, a common enterprise. I think about a group of individuals in the middle. That developer is in the middle, and the investing public's betting on them, counting on them, even if the token might be on 1,000 computers. That's not what the Supreme Court's looking at. It's not about the token being on 1,000 computers. It's just like a group of developers in the middle.
But if there is nobody controlling it in the middle, that's what we call decentralized, and that does happen. As you know, of course, the Howey test requires all four of the tests to be met in order for something to be defined as a security. Let me move on to another related issue, which is, as I said in my opening statement, I don't think that the SEC has provided a crypto-specific roadmap to the registration of crypto intermediaries. One example of the problem that arises is the SEC's customer protection rule was written in 1972.
A number of these intermediaries across the exchange, the lending, the broker-dealer, the custody space. As I've said a year ago, in the lending space, people should make no mistake. And I think it sounds like, Senator, you and I might even agree that the lending platforms are under
Right.
the securities laws.
Right.
But in the exchange space and the broker-dealer space, I accept that people have not come in and used what was put in place under Chair Clayton, that broker-dealer custody rule that you mentioned. And so I've said to staff, let's use everything in our regulatory toolkit, whether it's exemptive orders and others, to help facilitate and get this industry. People will not have trust in this space unless it comes into investor protection.
So I'm out of time, Mr. Chairman. So I would just say my concern is that the approach you're taking with these one-off discussions, if it did even result in an opportunity to comply, it'd be this idiosyncratic exemptive order negotiated with a single company, and that's not a good way to pass rules. It ought to be through the APA and a very public process.
If the chair would forgive me, I think we've been very clear through 70 or 80 actions, starting with that Dow order, the Munchie order, and many others, and they were full votes of the commission, they're not just staff. Secondly, I just look at other times in history. The SEC and the asset-backed securities market took 10 or 11 years where they did these, as you would say, exemptive orders or relief to individual issuers, and did a role at the end of that 10 or 11 years based upon all that experience. So we actually believe it's worthwhile to talk to the industry, talk to the market participants, and get them registered.
Thank you.
Intermediaries should be regulated under the Exchange Act. So could you address this? Why should crypto asset intermediaries and exchanges be regulated under the Exchange Act? And if you would, how would investors and market participants benefit from regulating crypto assets under the Exchange Act?
So I thank you. It's actually fairly straightforward because of these 10,000 crypto tokens. Without prejudging any one of them, I believe that the vast majority are securities because there's somebody in the public is betting on a better future, betting on anticipating profits on a common enterprise, a group of entrepreneurs in the middle. And then given that, these intermediaries that often have 50 or 500 tokens or 150 tokens, they're going to have a bunch of securities on that platform. How does it benefit the public? It's the time-tested protections that these crypto exchanges, we protect against front running and manipulation, and there's transparency. As you go into the New York Stock Exchange or into NASDAQ or the like, this committee's worked on laws long ago. I complimented Chair Fletcher, who was here in 1934 and did it, but long ago for that very reason, the public benefits. Right now, frankly, there's a fair amount of non-compliance. And so we're going to continue to try to work with the intermediaries, get them inside and regulated. If need be, use our toolkit, our regulatory toolkit, to adjust and facilitate, because there are some differences, as Senator Toomey and I talked about earlier.
Would you be able to, through the enforcement, also identify potential money laundering activity?
It's more the remit of the Department of Treasury. However, one of the key things under, as I understand the money laundering laws, the SEC has a role that our registrants, the exchanges, the broker-dealers, have certain compliance obligations over with Financial Crimes Enforcement Network at Treasury once they register, or whether they should register. And I believe it's even if they don't register, but they're legally required to, they have to comply.
There is an expectation that once the rules have been established, if they're really ambiguous, then that means that each time they have to come back to a regulator to ask whether or not what they're doing is accurate or not. And I think that causes some serious concerns for people that want to invest. So I just simply say, look, I mean, if you're making rules on these, and clearly you are making rules, a lot of them, let's be as precise as we can in them. And I think that'll eliminate a lot of the questions that are coming up, sir. Let me go into just a couple of items very quickly here. At a speech that you delivered last week, you quoted Joseph Kennedy saying, "No honest business should fear the SEC." You went on to say that given the nature of crypto investments, I recognize that it may be appropriate to be flexible in applying existing disclosure requirements. Matt Levine openly questioned that sentiment on a column for Bloomberg, stating the SEC has been suing crypto projects for illegally issuing securities for about 5 years now, but put in that time it has not issued any rules or proposed any rules or put anything on its rulemaking agenda about adapting the securities and disclosure rules for crypto projects. I echo Mr. Levine's comments. It seems to me that you want to regulate an entire marketplace, but clearly it doesn't appear that you've got rules in place to do so at this time. In my mind, this is simply unacceptable. And I know that your background in the private sector is you've got a great history in the private sector. So this is kind of confusing to us. I've heard from a variety of companies who claim they try to work with you and with your organization, but then you turn around and then you've hit them with some pretty heavy enforcement actions or slow walk the process. Mr. Chairman, you keep telling crypto entrepreneurs and the companies to come in and to register. Has anyone actually tried to do that?
To answer your question, there's 6 companies that are actually registered under the disclosure regimes. I would say this: not liking the answer from the SEC doesn't mean there isn't guidance, just with all fairness. And most of these tokens, the vast majority, are securities, and thus the intermediaries are likely to be in non-compliance with securities laws right now. So we're really trying to work with them. We're talking to a wide swath of these organizations right now to get them properly registered, to get them inside the remit. And this is what we do. With all respect to Mr. Levine, we've been pretty clear. My predecessor, Chair Clayton, was through commission actions and in his public voice in front of this committee and others about this matter. We're going to continue to protect the public as best we can.
In previous testimony, you issued proposed rulemaking in the last several days. Can you please break down into layperson's terms the nature of concern about illiquidity in Treasury markets and how the actions you're proposing to consider taking would address them?
So I would say to the American public, it's a big market. It's a quarter of our entire capital markets, $24 trillion. You can think of it as the base. It's sort of the foundation of our financial house. Everything else is built upon the Treasury market. And what we've found is we've had real disruptions, call them jitters. I hate to say it in the house way. It's like there's some termites somewhere in the foundation every few years. We had them in the 1980s and 1990s, and we had them in the last 6 years. And it puts some pressure on our central bank, the Federal Reserve, that sometimes then opens up and provides, using its balance sheet, liquidity to the marketplace, sort of as a lender of last resort. I think that we can lower the risk in that marketplace by ensuring that all the dealers, the high-frequency trading dealers, are registered and regulated. Secondly, that where the trading happens, these are trading platforms, are regulated, and some of those aren't. And really importantly, getting the benefits of something that sounds boring, but it's called clearing. It's the back office, which lowers risk in the system. So those are the main things. We've worked really closely with Secretary Yellen and her team and Chair Powell and his team on those proposals.
Welcome to King Stock and Crypto Channel.
King, what stocks you like?
I like Google, which is YouTube, and Walmart and Amazon.
And guys, we had Gary Gensler meet with Congress, and this was all for show. As we listen, nothing has changed. A lot of these cryptos are securities. And guys, we know once they bring in regulation, it's going to dwindle a lot of these cryptos out anyway. But now we have Charles Schwab, Fidelity, Citadel, Paradigm, and Sequoia come in and create EDX, which would be a perfect platform for cryptos that are considered securities. Now, Gary Gensler did say a lot of the projects came in and are working with the SEC. But we also know once these projects have been working with the SEC, then they get fined. But the SEC has done nothing to Coinbase after they stated a lot of their coins are securities, which is amazing because it's a publicly traded company. And right now, we know the dollar is strong. Everybody's running into the dollar. Everybody's running to the U.S. Treasuries. But we also have a few countries that are selling off U.S. Treasuries and getting off the dollar. And we know the Fed printed 20% of all money in existence in 1 year. And we see the United States taking a lot of inflation. But countries overseas are being destroyed. And we know they want to get off the U.S. dollar, and the solution is already set up for them. That's right, cryptocurrency. But guys, that's all I have for you. Y'all have a wonderful day.